Hey folks, it's Rod with Power Group. Welcome back on The Pursuit of Wealth. Today is Monday. Happy Monday. Hope you had a great weekend. It's August 29th. And in this video, going to do a public live stream, going to go over some market updates. We'll look at the charts. We'll look at the overall market. We'll do a quick check-in on everything. Normally I do these for private Power Group members, but wanted to make today's live stream public as we have a lot of volatility so far in the market. But before we get to it, make sure to smash the like, help support me in the channel. If you're new here, you can subscribe and tick the bell to be notified on any future updates. Also, if you do have any ticker requests, make sure to place them inside of the live chat. And let's go. We'll take a look at the crypto space here first. So we're starting to stabilize across all of our markets at the moment. So this is a positive sign. I did mention to POW members last night that we could see more weakness today, and I've been calling for a back test of 400 on the S&P 500 for quite some time. Bitcoin started weekly consolidation and gave us the clue that we could see that span across the broader market as well. But taking a look at the crypto space right now, 15-minute time frame, you can see that Ethereum is super strong at the moment in a 15-minute uptrend, and we're actually breaking to a 15-minute higher high, and we are breaking off from Bitcoin here. So Bitcoin's in a 15-minute downtrend with lower highs and lower lows, and you can see here that Ethereum has a nice uptrend here. So altcoins are also performing pretty well, and if we take a look at the Bitcoin dominance, BTC.D, you can see here that we're down almost 0.75%, so almost 1%. And again, that is evident when we see altcoins outperforming. And I'm still watching this descending triangle on the Bitcoin dominance chart. And if this does finally break out and break down, we need to lose 39%. If we lose 39%, the measured move and the target here is about 30% dominance. And we could potentially see true alt season here over the next couple of months into the end of the year, because we got about, this would bring us into around March, April. But we don't actually have to play out this whole pattern, right? This is just, it's saying that we could go out as long as April here into next year, but we could break down this month, we could break down next month, we don't know. We're just looking at this pattern, and generally it's a bearish continuation pattern where we break to the downside. So you have these series of lower highs and a horizontal line of support. It's called the descending triangle, and generally these break down more often than not. So I am expecting some volatility, some weakness in Bitcoin comparative to the rest of the market, just based on that alone. And we'll do a quick update here on the daily bear flag on Bitcoin. So if you recall, I said that we were watching for potential for a daily bear flag. Anything under that 0.32 fib there at 22,447 was a potential bear flag. We didn't get above it. I said we needed to break 22,500 to negate that, and we didn't get above it. We barely even got above the 0.236 fib, so it was a very weak bounce. And then I said, watch key support there at 20,760. If we lose 20,760, we confirm the bear flag, and we'd be targeting 18,500s on Bitcoin. And look how close it came, right? People still try to tell you that technical analysis doesn't work well. They just obviously don't know how to use the right tools, right? You can be the most skilled carpenter in the world, or, tradesman, tradeswoman. And, if you don't know how to use the proper tools in the right way, it's not going to matter, right? So from that target, we came from about 5% from that target. So we could be very well setting a temporary bottom here on Bitcoin. And we know that Bitcoin has been following tech stocks, right? So the NASDAQ, they've been very correlated, and this is good for the overall stock market, in my opinion, because of how correlated these asset classes have been. And if we take a look at SPY today, we closed at 402. We could still see an EMA 12 and 26 bear cross. I mentioned that we confirmed a daily downtrend with a lower high and lower low. We closed at the low of the day last week. We closed at the low of the week. And I said, expect more downside. Bitcoin was still a daily bear flag. So again, more confluence stating that we could potentially see even more weakness in the broader market, right? And again, Bitcoin was the clue. It started weekly consolidation way before the S&P 500. And we're actually very close here for the third week in a row, continuing this pullback in the third week in a row. But in my opinion, this is still a healthy correction. A lot of people are calling for, the bottoms nowhere near. We're going to potentially see, sub $10,000 Bitcoin, which could happen. If we take a look at the monthly time frame, the head and shoulders target is also in line there with the 0.618 fib retracement. So if we do retrace back to that 0.618, and the head and shoulders target actually takes us to about 13K. So I do think that there is a potential that we could see $13,000 and a huge flush we could still see an EMA 12 and 26 bear cross here on the monthly, and that would insinuate more downside, and that would likely put us down to that $13,000 area and would likely bring us pretty close to monthly oversold in terms of the RSI. But so far, it's all about 17,500. As long as that holds, it's just a healthy correction in my opinion. But like I said, SPY, the clue was Bitcoin starting weekly consolidation. If we look at, again, we're almost on week 3, but we were on week 2 last week, and SPY was only on week 1, right? So now we're on week 2. So again, Bitcoin gave us even more clues. And that's why you need to be looking at more than just, MJ stocks. I see a lot of people, they only invest in one stock or one sector, and they're just missing out on the whole picture, right? So the more data we have, the more, we can expect a certain probability. We don't know, we don't have crystal balls, but at the end of the day, you can look at the most probable scenario. And this was very obvious, right? From the time that we were bouncing here, we hadn't consolidated since 371 on the S&P 500. We ran all the way to 431. I actually took a short position, and I mentioned in the POW Group private community, on the 16th of August, I took the short. That's exactly when we topped out. Did I know we were going to top out that day? No, but I had price targets set. I said, I'll take a short position on the S&P 500. If we hit 430, I've already been building a short position. I added at 430, and I said I would add again at 450 and again at 470. And sure enough, we hit 430. We actually hit 431.73. I took that short. And if you look at SPXS from that time that we bottomed, right on August 16th, right? But from the low there, we're up 23, almost 23%, right? And instead of just buying the same stock, right, you can have a hedging plan, which you can short the S&P 500. So you'd be up 22% if you took that same trade that I took, right? And then now, because the S&P 500 is weak, a lot of our individual stocks are weak as a result. And then from this trade, from this short hedging position, you'd be up 22%, and you'd be able to take that money and buy even more beaten down stocks with it, right? You can hold cash. That's another way of potentially protecting yourself from downside as well. But yeah, it was very obvious. And again, we don't know for sure, but it was, we can look at the most likely scenario. And I said that there was an 80% chance that we were going to start weekly consolidation on the S&P 500. The dollar is breaking to a weekly higher high this week, and we're going parabolic here on the dollar. And in terms of the monthly time frame, just like we got done talking about SPY, how long has it been since we started monthly consolidation? Consolidation just means we're losing the low of the previous monthly candle. We haven't consolidated since January on the dollar, right? Does that mean that we can't keep going up from here? Absolutely not. We could still potentially see another month, another couple months of bullishness. We know that typically September isn't the greatest month, and October, and we'll see, but we know we have the midterms coming up in November, which we could see, in my opinion, a little bit more weakness leading into that. But I think October, the end of October into November, into the end of the year are going to be very, very bullish for markets, because we know that the dollar is going to pull back at some point soon, right? Nothing goes straight up forever. And it's now, since January, it's now been almost, it's been 7 months, 210 days. So we'll expect to pull back to at least EMA 12 there. I would say back test that 100 area. I've been calling for a 400 back test on SPY for a while now. Today we got that. We got as low as, what was the low of the day today? 401.20, right? And I've been calling for this for a long time, right? And then just like I'm calling for the dollar to break down at some point soon. And this will be good for stocks. This will be good for crypto. So if you're wondering, when's the bottom going to be in my opinion, the dollar needs to break down. We need to start monthly consolidation. It's a very simple statement. So all you say is, okay, if we lose the low of the previous monthly candle on DXY, that's going to be very bullish for stocks, right? But we have to keep in mind, though, when we do start consolidating, anything over 103 is a potential monthly bull flag, right? So when we do start to pull back, look at the monthly RSI as well. We're sitting at 76. Anything over 70 is considered overbought. So we will expect a pretty big pullback, just like I was expecting a pullback to about 400 on SPY. I'll be expecting a pullback to at least around 100 once we start the pullback on the monthly time frame. So QQQ down about 1% today. And again, closed right at the low of the week on QQQ, closed right at the low of the day last week. So again, the more confluence, the more names that are doing this, the more confident that we are that the whole market's going to follow suit. And then that'll trickle down into, it'll have its ripple effects into the individual stock names, right? And we could still see an EMA 12 and 26 bear cross on those EMAs on the daily time frame, which would mean even more downside, right? So again, we could even see a flush of 400 on the S&P 500, in my opinion. Precious metals today, breaking to a daily lower low, daily bear flag as well. So again, we had daily bear flags on Bitcoin and we had daily bear flags on, look at that perfect resistance rejection here. And again, more names that are breaking down, the more bearishness we have and confluence in the market, the more we can be confident in, the broader market following suit, right? So hopefully that helps. Sorry, that was silver, my bad. But gold, pretty much the same. Breaking to a daily lower low. And is it actually we'll go from the high here. Yeah, so we retraced a little bit more than the 0.32 fib. So I wouldn't say that we're going to target, the 1600s here on gold as possible, but we negated the daily bear flag, but we are dropping to a daily lower low, and we're now in a daily downtrend after being in an uptrend, higher low and higher highs, higher low and higher high, higher low, tried for the higher high, got a lower high and a lower low, downtrend confirmed, another low, lower high and lower low. So we're pretty weak right now on precious metals. So Tesla still struggling after the stock split, breaking to a daily lower low as well. And again, in a daily downtrend now with a lower high and lower low. So Tesla's now in a daily downtrend. That means zoom out to the weekly and continue to watch for weekly consolidation. What does weekly consolidate, or what does consolidation mean? It just means we're losing the low of the previous candle. So if you look at the weekly time frame, we're losing the low of last week, right? So consolidation is underway. I said I wouldn't be surprised if we back tested those EMAs. We could still see an EMA 12 and 26 bull cross here on the weekly. And realistically, as long as 276 holds on Tesla, it's a weekly bull flag targeting 400. So it's looking good, but we're coming on a critical zone here and support test on Tesla. And again, we could still see an EMA 12 and 26 bear cross on these EMAs as well. In terms of the bull and bear list, we have JSDA, MVMD, and Snow leading the decline today. On the bull list, we had Bed Bath & Beyond continuing its volatility. Hive was up almost 10% today, and WNW. AMC up slightly here marginally today. But Bed Bath & Beyond, this was another name that I said caution, down 72% in about 5 days, right? In a week, down 72%. People think that crypto and MJ stocks are volatile. Well, Bed Bath & Beyond just dropped 71% in 5 days. So everything's volatile when anything, look at the move, right? When we run 500, 600%, you need to expect a huge pullback, right? And a lot of people probably got wrecked. If you don't have a lot of experience playing these highly volatile names, it's an easy way to just completely wreck your portfolio if you're not experienced. So when you see something run 500, 600%, you should probably, use a utmost caution, right? And we'll jump into the chat here in a moment. So again, if anybody does have any ticker requests, make sure to place them inside of the live chat. If you are just joining us, welcome to the live stream. If you could smash the like, it helps support me in the channel, subscribe, all that good stuff. But we'll take a look at the MJ space here at the moment. So Tilray, leader in the Canadian space, is breaking to a daily lower low. And again, if we were only looking at Tilray or only looking at MJ as a sector, how would you have known that we were going to see weakness today? Well, the S&P 500 confirmed a daily downtrend. We closed at the low of the day on Friday. We closed at the low of the week. Same with QQQ. Same with Bitcoin. Bitcoin was a daily bear flag. We had all the precious metals with daily bear flags, daily downtrends across the board, right? EMA 12s and 26 bear crosses all over the place. So just by knowing that, we could expect more weakness. Even futures were breaking to a lower low last night. So we had all the heads up, right? But if you're just honed in and tunnel vision on one stock or one sector, you're missing the whole picture, right? And then that gave us the clue that we could see daily consolidation today. But we are just looking for a higher low compared to 351 on Tilray. And if we take a look at the weekly time frame, we're still in a weekly uptrend. So we have the low, high, higher low, and higher high. We're just scouting for a higher low compared to 317. So again, still very, very healthy at the moment in terms of this pullback. And it's a weekly inside bar that we're watching on Tilray. So support will be 351, like I mentioned. If we lose that, we continue weekly consolidation. And if we break support there at 419, we start the weekly bounce. And we'll look for resistance at 452 to get above that. And then EMA 26 is going to be extremely crucial, because from $67 on Tilray, once we confirm the weekly downtrend here with a lower high and lower low, we basically confirmed the weekly downtrend on April, the second week of April 2021. And then from there, lower high and lower low, lower high and lower low. Lower high broke the weekly downtrend here, but we didn't change the weekly uptrend. We didn't change to an uptrend. We were looking for that higher low. We had about a 90% move there in a couple of weeks. But again, we didn't change the trend. And look at EMA 26, that white line. Ever since we had the bear cross of the EMA 12 and 26 and confirmed the weekly downtrend, it's been acting as resistance. We can't get above it. Here we got above it slightly, but we didn't close the weekly candle above it. Same thing here, right? We had a bit of a bull trap here and a fake out. But what I'll be watching for, but again, we didn't change the weekly trend here. We broke the weekly downtrend with the break of that lower high pattern, but we still didn't get our higher low and higher high. So then we just faded to another low again, right? And then now the difference is here is we're in a weekly uptrend. We have the low, high, higher low, and higher high. We're scouting a higher low. This is extremely healthy, in my opinion. And now we'll be looking for a weekly candle close above EMA 26, that white line there. And that level is at 472. And this is on the NASDAQ, so it's all in USD. But if we can close a weekly candle over 472, I would easily be expecting a move up to around $9, $10 on Tilray in short order. And again, a lot of our names are targeting those EMAs as resistance tests and also targeting their 100 moving averages. And then I think ultimately their 200-day moving averages, we're looking up at around 581. And a lot of our names are doing this. Look at GTII, how I just did a video saying I have a $20 price tag on GTII, and look how close we're getting to my $20 price tag, right? That 200 daily moving average, we're within a couple dollars, right? So again, MSOS, likely testing the 100 now, likely going to be heading up to that 200, which would bring us up to around 18. I did a video and price prediction on VRNO as well. And I said I'm expecting about $12, which brings us up to its 200-day moving average, right? And, you can look at CDC testing its 100. So again, targeting about $6. We take a look at a name like Hexo. Hexo not even testing its 100 yet, but ultimately I think we could see a pretty big fast and furious move up to around 28 cents. And then ultimately that 52-cent area, which would bring us up to the 200-day moving average. So the more names that start to trend back and test their 200-day moving averages, the more we can expect names that haven't already done so to follow suit, right? And the more names that do it, the better. And the more ETFs that do it, the better, right? We want to see MSOS and HMMJ. So HMMJ, again, kind of similar to Hexo, hasn't even tested its 100 yet, but that's good because we could still see a lot more upside if the whole sector is starting to trend that direction, which I think it is. But we can't lose sight of the fact that the broader market is still weak. We could still see one more potential leg down, in my opinion. And it's just going to be a great buying opportunity leading into the fall in the midterm elections, where I think we have a very good chance of seeing safe banking pass. On the bull and bear list, we had PCLO, LOVE, and Huge. On the bull list, we had WIB, PWR, and TGOD. So MSOS, I said, as long as we close the week over, that resistance at around $12.99, where did we close last week? We closed right at $13. So I said, as long as we close over that, we can probably expect more upside this week. And what's notable about this chart? We're breaking to a weekly higher high. What's the S&P 500 and the broader market doing, right? It's consolidating. So we're going opposite. What have I been saying forever? That MJ is not going to reverse fully and enter a new bull market until crypto and tech stocks enter a bear market, and a confirmed bear market, not, a 20% correction. That's fine. When the S&P 500 runs 125%, 10 years worth of gains in 2 years, a 25% pullback is nothing. It's a blip in the radar. It's healthy, right? That should be expected. In fact, it probably should have pulled back even more, but because of the fact that, the markets are heavily manipulated at the moment, it's not surprising. But again, we could still see more downside. But again, very notable that crypto's pulling back on the weekly time frame, the S&P 500 is pulling back on the weekly time frame, and MSOS is breaking to a weekly higher high. That's what you called divergence, right? And that exactly lines up with my thesis that I've been saying for the last 2 years, that I've been saying that I don't expect a full-on reversal in MJ and enter a new potential multi-year bull market until tech and crypto enters its bear market, right? So essentially just inverse, the opposite. But MSOS, like I said, targeting its EMA 26, just like everybody else, and that would bring us up to around $15. But ultimately, I think that we could be heading up to its 200-day moving average. We haven't tested it in about a year, over a year on a lot of our names, actually, and that would bring us up to around 18, 19 bucks. On the bull and bear list, we have Halo, LOWL, and BioHarvest. On the bull list, we had Ian, AYR, and Cresco Labs. I also did a video on Cresco after they missed their earnings, and I said, big move coming. I was bullish, right? Everybody said, why are you bullish when they missed their estimates? I'm like, because the chart's bullish, right? I don't care what the earnings are. I care about what the charts are saying, right? but we are due. With that being said, we are due for weekly consolidation here. We could easily pull back from current levels. We could easily pull back 42% and still not even be testing those lows. So now bulls have a ton of room to form that higher low and higher high. And again, the whole sector was starting to show signs of a reversal, and MSOS, right? All of these ETFs. But again, look at CL. It's testing its EMA 26 here on the weekly. So again, what if the rest of MJ does the same thing? And the more names that start to do it, the more that we're going to expect names that haven't done it already to potentially do it as well, right? And then look at GTII. It's above its EMA 26 here on the weekly. So with knowing what we know, Trulieve, it's very close to its. Okay, so now we have all the majors in the US testing their weekly EMA 26s, and MSOS is only about 10% away. So if MSOS does it, that increases the odds that we're going to see the whole sector do it even more. And then we'll look at HMMJ. If HMMJ does it, then we can expect all these individual names in Canada to do the same as well, right? And then that would bring us up to about $8 on HMMJ. And then again, we just go through each of our individual tickers. So Aurora would be targeting about 236, CGC, you'd be targeting about $5, Cron, you'd be targeting, well, we're already there. Look, so again, the more names that start to confirm that, and the more confluence, the more confident we are in the names that haven't done so already. Hexo, we'd be at about 42 cents. So I like I said, I do think that over the next few weeks into November, we could potentially have a couple turbulent months ahead. But I think into November, end of November, through that period into the end of the year, I think we're going to see MJ stocks completely light the lamp, and they're going to steal the show, in my opinion. SNDL, right? Wasn't too far away. Came within 7%, 7-8%. Tilray, right? That would bring us up to around 475. BFF came within 4%, right? So the more names, Oxley's a great opportunity here, in my opinion. Not financial advice, obviously, not telling you to buy, sell, or hold, but this is a great potential laggard play. Again, what did I just say? If all names are potentially heading up to their weekly EMA 26s, why might Oxley do the same, right? There's a chance that it gets left out, or it may take a little bit longer because it is weak and we're penny stock status. But if it goes up to its EMA 26 on the weekly, that's a 100% move from current levels. So in my opinion, this is a screaming buy right now. And I've got an average of about 10 cents on this one now. So I am down about 45, 50% on this one. But again, it was a small position. It's less than 5% of my MJ portfolio, but this thing could easily make you a ton of money. If we just go back to where we were in February of 2021, we had a high of 51 cents. So from current levels just to that high, that's about 8.5x. So $1,000 investment into about $8,500 if we just go back to February 2021 highs. And then what happens if we go back to all-time highs there at $3, right? You're looking at, from current levels, you're looking at about a 55x, right? So that's $1,000 into $55,000 if we go back to all-time highs. I think Oxley's one of our biggest laggard plays, and how much are we really going to drop from here, right? We're 5.5 pennies away from zero. So unless you think Oxley's just going to kick the can and cease to exist, that's possible. Again, that's why it's less than 5% of my portfolio. I'm not 100% sold on it. I do like the company. They're a leader in the space, but we know that, they're big into vapes, they're big into 2.0, but Quebec is finally just allowing edibles, right? And they still don't allow vapes yet. So there's still a lot of growth for Oxley. Imagine if Quebec opens up like they are with edibles, we see Oxley enter, which they're probably going to do relatively soon. We know Tilray just dropped some into Quebec, and we know that Hexo has potential edibles coming here within the next, they said by the end of summer. We're coming on the end of summer, right? End of September, we start going into the fall. So we could potentially see that, and then other names as well. And then, like I said, once Quebec starts to allow vapes, we know that Oxley is a big leader in those categories. So there's still a ton of growth to be had in those formats. But we're looking real good here in terms of MJ. And if you're not happy that we're breaking to, it's easy to, if you're looking at the daily time frame today, MSOS is a bad example, but if you're looking at the daily time frame today on Tilray, you're thinking, another down day, right? But again, zoom out to the weekly time frame, we're not even consolidating. We're not losing the low of last week. What's SPY doing? SPY is losing the low of last week. So the fact that Tilray isn't losing the low of last week in MJ in Canada, that's a good sign, right? That's a good thing. but people just, they're focused on the 5-minute time frame or the daily time frame, and they don't zoom out and look at the bigger picture. And then look at MSOS. MSOS is breaking to a weekly higher high, right? So the opposite of the S&P 500. So if you're not excited about that, you should be, because like I said, we're starting to see this inverse correlation, and that money's got to go somewhere, right? And people are saying, well, if the broader market's going down, how come MJ is going to go up? You keep saying that because the money has to go somewhere, right? They're going to be looking for catalysts. So what's a sector that is beaten down 80, 90% plus in the last, year or two? And what is the sector that has a huge catalyst coming up? Well, that'd be MJ, right? We could potentially see safe banking. We could see descheduling over the next 1 to 2, 3 years. So if you just made a ton of money in the stock market, in tech stocks and crypto over the last 2, 3 years, you're going to look to cash that in and rotate those profits into something that hasn't run like that, right? So what better sector than MJ to see that rotation of money and look for further opportunities, right? All right, let's jump into I'm going to stop rambling and we'll jump into the chat here. Again, thanks for joining the stream, everybody. Hope you're having a great Monday and a great weekend. We'll jump in here. Resume bull trend. You mean MJ, Jeffrey? Or the broader market? I'll answer. I think I've already answered those, but yeah, we're starting weekly uptrends on a lot of our names, right? Even MSOS confirming its weekly uptrend. That means zoom out to the monthly. The monthly bounce is underway, the first time since November, and we're almost a year, right? Almost a year since MSOS has bounced on the monthly time frame, right? So we could easily see a move up to $20 on MSOS and a lot more upside. I do think that the bull move is going to continue, but like I said, SPY, we could still drop from here another 7-8% and still just be looking for a higher low and still be in a weekly uptrend on the S&P 500. That's why when you right here at 431, we were almost 15% away from our support, right? And then people, I see people today saying, I'm getting out of positions, or I got out of my positions, and I'm just going to sit on the market sidelines, and people are just getting way too emotional. They get like, if you haven't consolidated in 6 weeks, if you haven't broken the low of the previous candle in 6 weeks, we could drop from the high there 14% and still be in a weekly uptrend. Like people don't look at things from a logical perspective. They just feel emotion. They read the mainstream media, and they're on Twitter, they're looking at what everybody else is saying. They just feel a certain way because of reasons, right? There's no reason why you should be bearish right now. This is completely healthy, right? And we're still in a weekly uptrend, but people would say, the SPY is falling, and the Armageddon's coming. But until we break trends, until we lose the weekly uptrend, there's nothing to worry about, right? And with that being said, we could still pull back another 8% and still be in a weekly uptrend. So in my opinion, the bull trend hasn't ended, right? But the mainstream media would lead you to believe that the world's coming to an end, right? But I would have told you 2 weeks ago that we'll be expecting this, which I have been telling people. I've been saying it for at least 3 weeks now, that expect a pretty big pullback. And then sure, from the high there to the low, we're now down about 7%. But again, I'm still saying this is healthy, right? But mainstream media wants you to live in fear, and now they want you to sell when we're getting probably close to a bottom. And yeah, we could be potentially resuming the bull trend and breaking to a higher high. But yeah, we're still extremely bullish at the moment. You could even draw a bit of a trend line here. So we could even pull back to around the 390s, right? I've been saying now for about 3 weeks, we could see a pullback to 400, maybe even a flush of 400. We'd go stop loss hunting, right? A ton of people would have stop losses, because look how much we ran from the low to the high. Ran almost 20%. People thought the end of the world was coming, right? Stock market was going to enter a deep correction. Then we went from 370 or 362 all the way up to 431. And a lot of people got trapped and they didn't know when to enter. And they probably entered, when we broke 400 and then set a stop below 400, right? Because again, they don't understand that, markets ebb and flow, right? And instead of, and again, everybody's different. If you don't like buying, trying to catch a falling knife, I understand. It just comes with experience, right? And then again, we changed the weekly trend here. So once we broke 393 and 16, you could have entered there and then set your stop below 371, because if we lose that, we lose the weekly uptrend. But a lot of people just enter because of reasons. They don't have a plan. They're not looking at the trends. They're not looking at whatever. They're just looking at, mainstream media to make them feel good about it, or their friends or family to say, okay, yeah, maybe stocks are a good time to buy now. But that's because the prices are going up. And then they FOMO'd in, and now we're getting that pullback that I've been talking about for 3 weeks. And they probably have stops set at 400 or a psychological thing. If we lose 400, they're like, oh God, here we go again. And then they're just stopping those people out. The people that FOMO'd in are getting wrecked, right? And it's just rinse, repeat. That's what they do. I was buying down here. And then when we changed the weekly uptrend, that's when I started to get rid of my SPY shorts. And then when we got up here and we got extended and we hit daily overbought, that's when I started to pile on the SPY short again, right? And I literally posted in the chat room on August 16th. I'll bring it up here. Go back to the 16th. I said, not too late to take a short position on the S&P 500. So bringing it up here. There it is. Tuesday, August 16th, SPY hitting 430. Not too late to take an SPXS hedge position, folks. And then I said, daily RSI at 73. Michael Burry is selling everything. Should you? Wonder if he's planning another big short. Kind of funny, but I said, don't be surprised if we see a pretty big pullback. And then sure enough, I said you just saw the proof there that on the 16th, I said, not a bad time. It's not too late to take another position or take a hedge position on SPXS. And that was on August 16th. Look at the day that we topped out, August 16th. And again, did I know for sure? Did I know for an absolute fact that was going to be the top? No, I said I'd add again at 450, but I had a plan, right? Most people don't have a plan. They're just reacting because of emotions, or a mainstream media, article came out. But that's exactly where we peaked, right? And why was I so confident? It's because the daily RSI was heavily overbought, and we hadn't consolidated in 6 weeks, and Bitcoin was on week 2 of consolidation. It was likely going to follow suit, right? So anybody who tells you that charts and technical analysis don't work, they just literally have no idea what they're doing, right? They don't know how to apply the tools to make it work in their favor, right? Hey, Danny, could you check GRWG? Sure, no problem. So weekly inside bar. So again, another good thing that we're not seeing weakness and breaking to a weekly lower low like the rest of the market. S&P 500 cryptos breaking to weekly lower lows. So the fact that we're not doing that is a positive. And it's a weekly inside bar. So we're watching key support at 453. If we break that, we continue weekly consolidation, week number 2 in a row. And key resistance is going to be 538. We break 538. We continue, we start the weekly bounce, and we look for a continuation of this uptrend. We have the low, high, higher low, and higher high. Now we're scouting a higher low compared to 396. That is the most important support, as if we lose that, we lose the weekly uptrend. So watch 396 as key support. So that's support number 2 and major support. Support number 1 in the short term here is 453. So watch 453. If we lose that, we could be heading closer down to around that that $4 area. But yeah, resistance is the high of the bounce there at 620. So resistance number 1 is weekly inside bar resistance at 538. And then resistance number 2 is at 620. And that's the major level of resistance. And again, what I've been saying, all our names are trending up to their EMA 26s on the weekly time frame. So we came very close on GRWG. We came within 9%. So if we do see that that pattern and that trend continue, where all of our names are starting to trend that way in the MJ space, that would bring us to about $6.73 on GRWG. Like I said, CL, look at CL. It's already testing its EMA 26. And then GTII is already above it, right? So if GRWG is heading up there as well, I think over the next couple of weeks, we could see a price tag of about $6 to $7 here on GRWG. But still in a weekly uptrend, looking real good. On the daily time frame, we could still see an EMA 12 and 26 bear cross, just like a lot of our names in the broader market. But we are holding up relatively well comparatively to our broader market names, right? Or indices and things like that. And if we lose support here at 453, we confirm a daily downtrend. We'd have our high, low, lower high, and lower low. So all about that 453, we lose that, we confirm a daily downtrend, and then at that point, the weekly inside bar would break bearish, and then we'd be looking for a pullback to around $4. But that would still be healthy, in my opinion. And it's all really going to depend on how weak the broader market is. If we can start to see a turnaround in the broader market, then we can be confident that a bottom is likely going to be in on, or that we're likely not going to see another leg down on this as well. But we did get above the 10-week moving average. We are starting to see a bear cross of the stochastic here on the weekly time frame, which is a bit of a concern. But the MACD is still bullish, and we're back testing this 10-week moving average. Look at it here. We got above it, rejected. What was the difference here? We didn't confirm a weekly uptrend. It was just a lower high and then a lower low. Rejection. Here, low, high, higher low, and higher high. We confirmed the weekly uptrend, and it was a huge bull trap and fake out. So this was a pretty nasty play here. A lot of people probably got wrecked on that one. And then here we are back down to, $3. So we hit a high of $10 all the way down to $3. A lot of people, that's why you use stop losses though. So low, high, you could have entered here around $7 looking for that higher low, and then set your stop under the low here at 674. Because if we lost 674, we lost, we were breaking to a lower low. So that would have been a pretty low risk trade, but you would have got stopped out. You would have, risked, 25 cents, 30 cents. Not a big deal. And that would have saved you, 50% worth of downside from those levels. And then you could have done the same thing here. So we had the low there around 342. We have the low, high. We've got that higher low at 396. So you could have entered on that higher low opportunity and then set your stop below the low here at 342. And then here we are breaking to a higher high, back testing the 10-week moving average. Look what happened here. We didn't even really back test it. We got above it and then immediately rejected. And then look here. We got above it, came back, tested it as support, lost it, confirmed resistance again, continuation of the downtrend. Here, we're getting above it, confirming the weekly uptrend, and another higher low, still holding support, still in the weekly uptrend, back testing it for the second week in a row as support. This is looking really, really good. And then if we take a look at the weekly moving averages and where we could potentially expect to move from here, again, I think $10 is very, very doable here over the next couple of months. That would bring us up to the 50 weekly. And then if we take a look at our daily moving averages, we have the 200 there at 839. So again, a lot of our names are starting to trend back to their 200 daily moving averages. That would bring us up to around $8.40. And we're starting to see a bull cross of the 100 and the 50-day moving average as well, which is looking good. And look, we're back testing the 50-day moving average. Look here, we rejected. Didn't confirm the weekly uptrend, rejected. Here we confirmed the weekly uptrend, got above it, came back down, back tested it, and immediately lost it. Here, look what's happening. We're bouncing it. We pulled back and then we bounced, rejected at the 100. We're sandwiched in between those. This is looking really, really good. I really like the look of MJ at the moment, especially when we have so much uncertainty in the market and worry and fear, uncertainty, and doubt, right? Markets don't like an uncertainty. And right now, MJ, there looks like there's a lot of certainty. So hopefully that helps. And if you do give me like a, if I'm looking at an example, hey Rod, can you check GRWG? I'm looking to buy, I'm looking to sell. My average is this. This is what I'm looking to do. I can tailor my responses back to you a little bit more, but if you want my unbiased opinion, that's okay too. So yeah, hopefully that helps. I'm super bullish on the markets. There's a lot of noise though. Yep. And that's basically, that's one of the biggest reasons why I created the Pursuit of Wealth POW group, was because there was so much noise, right? There's just, markets are very overwhelming. And then couple that with like a Facebook public group or Reddit. It ends up being brain overload, right? And yeah, you get so many difference of opinions, and that's not a bad thing. But when you got a group of 2,000 people in a public forum, and it's easy to get the herd mentality. And yeah, I've been bullish on the markets for a while, but I said I was short-term bearish, medium-term bullish, long-term bearish. So what happened in the short term? I said that last week. What happened in the short term? We just cratered like 7% on the S&P 500, right? We lost like 1,000 points on the Dow, I think, in one day. So again, I said short-term bearish, medium-term bullish. So I still think we're getting close to a temporary bottom here, and we're going to continue to trend higher. But long-term, over the next year to 2 years, I think we're going to head a lot lower. So my thesis hasn't changed, and it's been bang on so far. MSOS looking strong, you bet. weekly uptrend, like I said, the fact that it's breaking to a weekly higher high while the S&P 500 is breaking to a new weekly lower low, and same with Bitcoin in the crypto space, that is a very reassuring sign. So very, very strong, I would add. But yeah, good eye. Hello, Rod. SPY short to long term, please, bullish or bearish? Yes, I think I just answered that question. I actually said this last week. I said I was bearish in the short term, bullish in the medium term, bearish in the long term. And then if we look at the S&P 500, I said bearish in the short term, and look what happened in the short term over the last week or so, down 7%, right? Because we were overbought on the daily RSI, right? We hadn't consolidated in 6 weeks, and we could pull back about 14% and still be in a weekly uptrend. So that's why I said I was short-term bearish, but medium-term bullish and long-term bearish, because long-term, I think we're going to see something like this. I think we're going to see the .com bust fractal. The price peaked 4 years after the RSI peaked on the monthly time frame in the .com run-up, and that's called hidden bearish RSI divergence. And it took 4 years, and then the price capitulated, and then we went down to monthly oversold. Look at how scary similar this is. The RSI peaked in 2018, and then 4 years later, the price peaked, and here we are heading to monthly oversold. Could we hit monthly oversold in October, March? Where are we going, right? We don't know yet. I think it's going to be, the markets are manipulated, heavily manipulated. So I think it's probably going to be, I'd say it's probably going to be somewhere around like March to April next year, maybe even into the summertime. Maybe sell in May and go away is what we could potentially look for. But, by this logic, it's saying we could go all the way. It could last until February of 2024. So just by taking that bus fractal from the .com, I just took this fractal here from the high to the low, and that's what these blue bars are. And then that's saying that we could potentially be down. We're not even on the first full corrective wave yet. And if we see a potential lower high and the second wave, third wave, fourth wave, fifth wave, we see that 5-wave corrective structure and then backtest this broadening wedge support, we could easily be targeting 220s, maybe even we could even flush below 200. A lot of people are forecasting that we could go as low as into the hundreds on the S&P 500, and I think so too. Because again, what goes up must come down, and the more aggressive we get on the move up, and the faster we move up, and the harder and the more aggressive that move is, the faster and the more drawn out and the more aggressive move it's going to be in the opposite direction. So like I said, the S&P 500 from the lows of March 2020 to the highs here of January 2022, right? You're looking at 125% increase on the S&P 500. Let's just do a quick Google search. What is the average annual return of S&P 500? 11.88%. Okay. So if the average annual return is 11 to 12% in a year, so that means that the most we should have saw was a 25% gain, but we got 125% gain. What does that tell you? Well, it's just simple math. So 125% divided by, we'll say 12%, that's 10 years, over 10 years worth of gains in 2 years, right? So we need to expect this massive, massive pullback. And again, I hope we don't, but I'm prepared for all scenarios, right? Do I know that this is going to happen for an absolute certainty? Absolutely not. But am I prepared for that pullback? Yes. Am I prepared for new all-time highs? Yes, right? The markets can only do 3 things. They can go up, down, or sideways. As long as you're prepared for all scenarios, you'll sleep at night and you'll be fine. That's why I've been screaming from the rooftops about having a hedge position, taking a short position on the S&P 500, keeping a lot of cash, just whatever you got to do, maybe take a little bit off, right? So hopefully that answers your question. Thanks for the question too, Jatinder. So Rod, crypto goes down more and SPY goes and MJ goes up. Now MJ's turn. Thank you, Rod. Yep. That's what I think, right? But again, if we see some macro event, right? Some geopolitical event happens, a black swan that we just didn't see coming. Let's say tomorrow China invades Taiwan. God forbid, fingers crossed, knock on everything, every wood surface around. But if that happens, what do you think is going to happen to MJ? And don't be like, oh, Rod was wrong. He's full of crap, right? SPY's going down and MJ's going down with it. Well, yes, if there's a black swan, if the fear trumps all, right? Fear is the most strongest emotion in the human, anatomy, right? So greed is strong too, but fear is even stronger. So here's what happens. Let's say we wake up tomorrow and we find out that there's this catastrophic event that no one saw coming, and SPY drops 10% in a day, right? Circuit breaker, the whole market's in turmoil. Everybody's losing their ever-loving mind. What do you think is going to happen to MJ? Probably going to crater, right? But what's going to happen is MJ will probably dip like crazy, and then it'll bounce like crazy, and it'll be short-lived, in my opinion. So it's not immune to the market weakness, but the trend over the next 1 to 2 to 3 years, I think is going to be higher. Doesn't mean there's not going to be dips along the way, but I think any major dips at this point in MJ is going to be strictly for buying. It's just a buying opportunity. Again, not financial advice. It's just for entertainment purposes only. But I know what I'm doing, and I'm going to be buying the dips from here. And time in the market is better than timing the market in the MJ space, right? We're down 90+% on most of our names. I just want to have time in the market. When something's down 90%, we have huge catalysts coming. I'll just sit. I'll be patient. The stock market is, like Warren Buffett says, it's a mechanism for transferring wealth from the impatient to the patient. So when tech stocks are up 90% and when the S&P 500 is up 125%, do you think I want to time in the market? Unless I'm going short, right? Unless I'm betting that the price is going down, then yeah, time in the market is better. But why on God's green earth would I ever want to time in the market at, when we're up at all-time highs, we're up 125% a year, right? I'd rather time the market at that point. That's why I've been timing the market with these short positions, like I showed you on the 16th of August, right? I'm more of a trading mentality when it comes to this kind of stuff now, right? With the broader market and tech stocks and crypto, right? Certain cryptos that haven't run, like altcoins. I think we're going to still see an altcoin season. If it takes a year, 2 years, 3 years, I don't care. I'm prepared to wait, but I'm prepared for all scenarios, right? I have cash on the side. I have a short position on the S&P 500, which I'm up about 22% on that. And I'm going to look to take profits on that. And then I'll look to re-add it again if we get to, 420 or 430 again, right? Just rinse, repeat. But when it comes to MJ, I'm not trading it. There's no point, right? I see people all the time like, oh, I just bought my MJ positions back. I'm like, well, first of all, you want to be careful, because if you're over trading, if you're doing it in a TFSA, you could flag your account, right? So you gotta be. There's a lot of things to consider, but yeah, for me, it's not worth the stress. Right? It's money that I don't need. I never invest any more than I'm willing to lose. I have a ton of cash on the side. I have a 6-figure cash position, and I have a ton of cash ready to deploy. I'm looking at potentially buying another real estate property, my third in a year, and and again, I'm not going to Vancouver or Toronto to buy real estate where it's at, crazy valuations. I'm buying it in a market like Edmonton that's been trending down. Again, time in the market when Edmonton's been in a complete downturn economically and real estate wise, especially the condo market. If we've been just like for 15 years capitulating and just cratering in real estate, time in the market is good, right? I just want to buy it, hold it. As long as I'm paying the bills, covering the costs of what it takes to maintain that, time in the market is way better than timing, right? And, it's easy for people to just get in and out of positions because they think emotions and they say, oh, mainstream media is making me super scared. I got to sell. But that's what's great about real estate too, is it teaches you patience. It's not a get rich quick scheme. Everybody wants the instant gratification. They can't wait 5 minutes, let alone 5 days or 5 years, right? And what is the stock market? It's a mechanism from transferring wealth from the impatient to the patient, right? So that's why I like real estate, because it teaches you patience. It teaches you that the real wealth is accumulated in years, not days, right? Can it happen in days? Yeah, right? You could get lucky in months. What Dogecoin went up like 150x. Or like 200 and some X. So if you put $1,000 a year later, it would have been worth $250,000. Okay. You could get lucky that way and do it in a year or 6 months or whatever. And everybody's, difference of life-changing amount of money it differs, right? Some people think 5,000 is a life-changing amount of money. To me, that's peanuts. I don't care about $5,000. Right? I'm here for the $500,000 gains, right? That's what I'm looking for. And MJ and crypto can get you there. It's just, you need to have a plan, right? You need to be patient. You have realistic expectations. So then that's why I like real estate, because you're not getting in and out of positions all the time. You can't sell the market's on the brink of collapsing. I'm going to sell my house and rebuy it back in a month. You can't do that, right? So it teaches you patience. And again, if you're only honed in on MJ, if you're only honed in on crypto, if you're only if you're only focusing on one thing, in my opinion, you're doing it wrong, because you need to be diversified. You don't want to stretch yourself too thin. You don't want to over diversify either. But it's easy to get emotionally triggered and just impatient when you're only looking at one stock, you're only looking at one sector, right? So yeah, it's a challenge, right? And this is what the stock market is designed to do. It's designed to make you feel emotions and react emotionally versus using logic, right? But thanks for your question. Broader market, and you did answer. Okay, perfect. Yeah, I thought so. Can you look at Tariga Science? It's been beat up for a long time. Symbol TAUG. Yep. So rejecting at EMA 12. So again, EMA 26 has been a brick wall, and we are potentially changing the trend here. So we have the low, high, higher low. Now we're looking for a higher high. So key resistance to break is going to be 10.5 cents. If we get over 10.5 cents, we confirm the weekly uptrend. It is a bit weaker though. Again, what have I been saying about MJ? Any of the, this is an MJ name, right? Yeah, it's in the US, I think. So if TAUG is weaker, it goes with what I've been saying, right? When we're down 80-90% in the MJ sector, the small caps are gonna lag, right? And exactly what I've been saying is happening, right? CGC, look at it, just on an absolute up 100% in a little over a month. Then you got Tilray up. Well, it was up about 50%, right? So the tier ones, the large caps run, and then look at GTII, right? Massive. Look at its move off the low, 80%, right? So I wouldn't be too focused on the tier twos, the tier threes, and the penny stocks when we're like, there's just so many good deals out there, right? Like I wouldn't even be wasting my time with it, to be honest. But if you're a bag holder and you're just holding it, wondering like what the update is on it, that's different. But if you're looking, but with that being said, CGC has run 100%. Tilray's run 50%. We got 80% on GTII. That money potentially we could see them cool off. We know Cresco hasn't consolidated on the weekly time frame in forever, right? Just like SPY did. And eventually we pulled back 7% on SPY. So we haven't pulled back in forever on CL here. How many weeks has this been? It's been 63 days since it's been 9 weeks. We haven't consolidated on the weekly time frame. So you need to expect a pretty big pullback. I could easily see a 20% pullback, maybe even more on Cresco, because we have no support. And we still didn't change the weekly trend. We didn't get our higher low and higher high. Came close, but it was weekly inside bars and they ended up breaking bullish. Actually, I guess we got a tiny one here, but it was only by like 5 pennies. So not enough of a pivot point and pullback, in my opinion. But again, the more we run without that support, that's why we want to see this. We want to see higher lows and higher highs and then get up to that price, right? Then that way, when the prices fall, we kind of stop here because that's our support, right? But since we don't have that, we could easily drop all the way down here. We could drop 30-40% and still be healthy, right? And most people would be losing their ever-loving mind, right? Oh God, PTSD. But someone like me who's got, over a decade of, like hundreds of thousands of hours, right, putting into financial markets, I spend probably 200 hours a month studying financial markets, right? And I've done that for like the last 15 years. Well, not the whole 15 years, but over the last like 5 years, I've been 200 hours a month into learning everything financial markets, right? And it's paid off, right? There's no shortcut, right? There's no shortcut to greatness. And if you want to learn it, you can. You just have to apply yourself. I'm living proof that you can. I didn't have any financial background when I first started. And I first got introduced into, mutual funds, things like that. Piqued my interest, while all my friends were wanting to go to college and party and, just drink themselves to death and, not want to worry about their future at all. They're in a university, which is planning for their future, but they didn't want to do anything, right? They took a program that they didn't even know if they really wanted to do. I didn't want to go to university. I went to college because I said, well, I'm not going to go to university and spend 50 grand and not know what I want to do. I'm going to pick something, spend 5 grand at college. And if I don't like it, I'll just go back to college and pick something else. Right? And I could go study 2 programs for 10 grand and still spend, way less than going to university, right? 30 grand less than going to university. And, you know, here I am at 32, financially free for the rest of my life. I don't really care if I have another dollar. And a lot of my friends are still paying back that student debt. Is that the wrong way to do it? Absolutely not. But that wasn't for me, right? And if you want what 99% of people if you want what 99% of people don't have, you need to do what 99% of people don't do, right? So if you want to have a different lifestyle than the rest of, you know, everybody else, you know, again, we're just regular Joe like me or regular Jane. If you want to live a life of, you know, abundance, if you want to never have to worry about money again, well, you're going to have to do things drastically different. And that's why I say the quote all the time. My favorite quote: the secret to your success or your failure is hidden in your daily routine. I'll say it again. The secret to your success or your failure is hidden in your daily routine. But yeah, TAUG, that's pretty much all. Looking for that weekly uptrend. So 10.5 resistance is the level to get above. We get above that, we start the weekly uptrend, and we'll look for even more upside after that. But it's looking good, right? The whole MJ space is starting to trend higher. So it is looking really good. You said it, best in the market, then time it, even if it's 1/3 position until market claims a trend. Exactly, right? And you know, who cares if there's another dip? That's just opportunity. The longer the accumulation, the greater the expansion, right? The longer the base, the higher in space. And you know, I welcome any more dips from here in MJ because I'll just buy them, right? I got a ton of money set on the sidelines. I got a short position on the S&P 500. So if the S&P 500 continues to go down, MJ is probably going to go down with it a little bit, you know, at least not to the day, the second, the minute, but the overall trend, right? It's going to be headwinds, even though, you know, MSOS is breaking to a weekly higher high this week. That's, you know, but if we see a hard, fast flush in the markets and a black swan that no one sees coming, that could be a huge buying opportunity, right? And that's why I've been hedging SPY, right? Instead of putting all my eggs in one basket or all in one stock and one sector, I diversify some of that cash. I put it into a short position. And then when the broader market goes down hard and fast, a lot of our individual names go down hard and fast. My SPY position is up, you know, 10, 20%. And now I'm able to even buy even more cheaper prices on those individual stocks that I was looking at, right? For the long term, going back to your other question, was SPY short, long term, bullish and bearish? Yeah, so I think I answered your question. Long term, I'm bearish, right? I think we're gonna see something like this, where we're going to pull a .com days again. How much did the .com bubble really run from its low, right? From this monthly higher, from this big pullback here, we ran about 69%, right? And then we entered a huge bear market and multi-year bear market and monthly oversold, right? So actually, let's do it this way. How much did we run from the price peaking on the RSI? So we ran 142%. Yeah, that's what we would use. And then how long did it take for the price to bottom out after that? About 760 days from the peak of the price to the low on monthly oversold. So from monthly overbought to oversold and to where the price peaked, it took about 760 days. But from the peak of the RSI, the price ran 135% or so. So let's do the same thing here now. So if the price peaked here, or the RSI peaked here, from that we ran 77%. So by that logic, we could see another higher high, right? If we pull something similar to the .com days. So let's just go back here. So where would we be if we ran 133%? That would, or 130%. That'd bring us up to the 600s. Could that happen? Maybe. Do I think it's likely? Probably not. Could we still see one more higher high? Yes, I think so, because of how manipulated the market has been, right? The Fed wasn't printing trillions of dollars, inflating the market back here, right? But now they are. And yeah, the dollar, they've just been printing the dollar ever since it came off the gold standard. It's just been printing it into oblivion. Eventually, it's backed by nothing. we're probably going to enter a massive, massive correction. So yeah, long term, I think this could happen. And again, from the time the price peaked in .com days, and you might be wondering, well, why are you using the .com days? Why do you keep referring back to that? It's just because the fact that it's very similar, right? We had the internet of information. Now we have the internet of money, right? Crypto is the internet of money, and transferring value around the world, which I would argue is way more important and valuable than information, right? And then here it was the .com and the tech bubble from the information boom, right? The age of information and the age of the internet, right? That's what happened. And then now we're seeing the internet of money and the everything bubble. This was the tech bubble, the .com bubble. This is the everything bubble, right? So if it's the everything bubble, might we think that the crash is going to be even worse, right? It was just mostly tech that was at, it wasn't just mostly tech, but like that was the main focus. Now it's not just tech, it's tech, crypto, real estate was going crazy, right? A lot of our, sectors as well, like individual healthcare, things like that. So it's the everything bubble. So yeah, by that logic, how long is 760 days? That's exactly, it lines up exactly with this fractal that I put there too. So the .com is the closest thing we have as a barometer, as a, the past doesn't always repeat, but it rhymes. So it's the closest thing that we have to this bubble. The everything bubble was the .com bubble, right? And the mainstream media sounds pretty similar, right? The way that they're, just moving the herd, so to speak. And by that logic, yeah, it's saying here that we might not bottom out until February of 2024. So that means we could see 2 years worth of pain. Doesn't mean we won't have huge opportunities to buy the dip. But again, this is where it's an example where it's good to time the market, because when we're expecting multi-years of downside, you don't want to buy a stock like a tech stock and say, oh, time in the market, 10 years, it's going to be worth more. Well, that might be true, but might you be able to get a better price and enter lower, right? So that's why time in the market is better. See, like if price got down here or down here, I would say time in the market is better, right? Could we drop more and go down sub 100 or sub 200? That's possible. But by that point, we would down about 50%. How much did we drop in the .com days? Oh, look at that, 50%, right? So 50% would bring us down to 230s. So I'd be looking to time in the market right around here. Start dollar cost averaging in, right? But right here, there's no way I want to be in the market long term, right? Why would I want to time in the market long term if I'm looking bullish? Unless I'm taking a short position and looking to hold that short through, the next couple of years, then yeah, time in the market can be beneficial there. But yeah, long term, again, we had 10 years worth of gains in 2 years. We're accustomed to 12% gains on the S&P 500 in a year, annualized returns, and we had 125% in 2 years. So again, the more aggressive we are on the upside, likely going to translate to more aggressiveness and matched aggressiveness on the way down. Hopefully that helps. And again, I don't like coming on here and telling everybody that the spy's falling and we're going to see Armageddon, and just imagine the fear and the mainstream media and the panic, right? You could smell it from a mile away, probably. Right? It just the sweat, the beads of sweat running down people's neck if we got to 200s on SPY, right? But I'm pretty sure it's going to happen. Am I confident 100%? No. How much am I confident? I would say about an 80% chance we're gonna test those low 200s, and then maybe a 20% chance we drop below 200. Look how close we came in the C19 dump, right? Got as low as 211. And that factors in the dividends and everything. If we take a look at SPX, which doesn't factor in dividends, it was 218, I think, right? 219. So SPY factors in dividends and stuff. So a little bit skewed there. The SPY is falling. The SPY is falling. Yeah. Jeff says, you're wrong. This is the best time in your life to get in the market. Well, I would argue that this was one of the best times right here, this black swan, when we were weekly and when we were heavily weekly oversold. that was the best time, literally, because that was the most bullish. That was the most returns we've ever seen in that short a period of time. So I would say that was the best time to get into the market, because there's never been a history in the history of markets where markets have gone up 125% in 2 years. Like I just said, 10 years worth of gains in 2 years when the S&P 500. So no, I respectfully disagree. And again, we can all disagree and still be friends, right? But no, I couldn't agree. I couldn't disagree more with that. Research your stocks. Well, like I said, I've been doing this for 15 years and I've got over 100,000 hours and about $25,000 worth of courses. So I think I've researched quite a bit. Yeah, exactly. Right. So no one knows for sure, but I've got my thesis, right? You don't have to listen to me. Have I been wrong before? Absolutely. Right. But as long as you're right more than you're wrong, and as long as you're prepared for all scenarios, that's really all we can do, right? We control what we can control, and we don't try to worry about the things that we can't control. Thanks, Jeffrey. Yeah, again, I'm not trying to toot my own horn. I'm just being honest. And like I said, I grew a portfolio from 4 figures to 5 figures to 6 figures, and now I'm close to a 7-figure portfolio, right? And it just gets easier and easier and easier. And the more you look at these charts day in, day out, you live it, you experience it, you go through 80, 90% corrections, you go through these huge bull markets, it just starts to resonate, right? And it's just experience. There's no shortcut to anything really in life. Like I said, you might have the odd outlier who wins the lottery, but shows that majority of people who win the lottery end up going broke because they didn't earn it. They didn't know how to manage their money. They had a shortcut, and then it ultimately ended up being their demise, right? And that's why, is because, as people get more money, they spend more money. It's not about how much you make, it's about how much you keep, right? And what you can do to preserve that capital and multiple streams of income. It's cash flow, right? Yeah, you're right. Well, again, I might not be, right? I'm not. I'm humble. I hope I'm right, because who wouldn't want to be right? But again, I'm prepared to be wrong, and I'm prepared to be right, and that's all we can do, right? You're welcome. Algo, your chance for the hard times ahead. I'm not sure what you mean. Are you asking, is there hard times ahead, or your chance to load up? I think you mean like your chance to get in. Yeah, Algo is probably my 3rd biggest altcoin I'm holding at the moment. I don't own any Bitcoin. I don't own any Ethereum. I sold it all about a year ago when it was close to all-time highs, and I have no interest in getting back into it, right? Not for like a long time. And I'm focusing on altcoins. My biggest position is XRP, XLM, Litecoin, Algorand, then Quant, HBAR, Theta, and Filecoin. And then I also have some Chainlink. But yeah, Algorand, this is like an opportunity of a lifetime. Absolutely. If we go back up to all-time highs, you're looking at about a 10x. Well, yeah, that's close to all-time highs. So you're looking at almost a 10x. And realistically, I think this thing's going to be worth like $10 in the future. So if we get to easily $10, like maybe even $100, but I think $10 is easily doable. And that would bring us up about 36x. So for every $1,000 into about $36,000. And if we just go from the high to the low here, that lines up with our fib extensions as well. So the 3.618 there, around $12. Look what Bitcoin did. From high to low, hit its 3.618. So again, if history rhymes for Bitcoin, if history rhymes for Ethereum, might it do the same for our other altcoins in time, right? Usually all things in time. This hit the 3.618. So if Algo does something similar, again, it's new, right? But if we hit the 3.618, that'd bring us up to about $12. And from current levels, like I said, that's about a 38x, 40x. So for every $1,000, that turn it into 40 grand. I think, yeah, you're right. I think that Algo is a great opportunity. HBAR is another one that I really, really like. And it's going to be listed on Coinbase soon. But if we just go back to all-time highs on HBAR, you're looking at about a 7 to 8x. And again, I think this thing's easily worth $10. Easily. All right. Thanks, everybody. Appreciate all of your input, your questions, your comments. If anybody is joining the stream after the fact, smash a like, subscribe, all that stuff. Leave a comment. Let me know if you agree with me, disagree with me. What's your outlook in the short term, the medium term, the long term? I already gave mine. That's just what I think. Let me know. I'd love to hear from you. I always do. I love reading the comments and interacting with you all and continuing the conversation below. But going to end it there. Thanks again for joining us on The Pursuit of Wealth. We'll see you guys again real soon. I might try to get a Tilray video out here after this. And yeah, looking forward to the days and weeks and months ahead, especially in the MJ sector, as we're starting to see things start to break away from the pack, right? MSOS breaking to a weekly higher high, while a lot of our names like the S&P 500 breaking to a weekly lower low. So a lot of positive glimmer of hope in MJ land. So, all right, going to end it there. Thanks again for joining us on The Pursuit of Wealth. If you could smash the like, help support me in the channel, doesn't cost you anything, and share the video with anybody that might find value. And we'll see you on the next video.